Welcome to Northwest Arkansas Investing Podcast, your go-to source for real estate investing in Northwest Arkansas.
Whether you're a seasoned investor just starting out, we bring you expert insights, market trends, and practical strategies to help you build wealth through real estate.
From buying and selling to property management and long-term investment planning, we cover it all so you can make smart, informed decisions in this fast-growing market. Let's dive in.
All right. Welcome back to the NWA Investing Podcast, joined by my co-host, Zach Stanley, Brandon Still. We have Desiree Stock again here with NWA Look. Excited to deep dive into the data. So welcome back,
Thank
Desiree.
you.
Yeah. Last episode, we kind of talked about the data as a whole. And this episode, we're going to dive into how Mr. or Mrs. Listener listening in, how do you take that data and underwrite a deal from it, and where would you get that deal? And we're kind of taking the next jump there for how do you take data and then this soup of data and pick out the right points to help you get your first investment property or your second or your 50th investment property. So let's revisit some headline metrics here. Says Fayetteville had 557 sales year to date and Bella Vista 473. Do you have more stats on that?
I actually got updated stats on that.
Okay, perfect.
So,
yeah.
Year to date being till September, the end of September, Fayetteville was 1,335 closed transactions. Bella Vista was 1,085.
Wow.
Bentonville was 1,157, and Springdale was 978 transactions closed.
What was Fayetteville again?
It was 1,335.
35. That's interesting to see that kind of tight spread there. Especially Bentonville being 1157 and Bella Vista being 1085.
Yeah.
I feel like that's a really interesting stat.
It's been interesting over the last few years to watch Bella Vista really increase in closed sales.
Is this a rumor? I don't know if any of you guys know about this. Is it a rumor that the Waltons just bought the ACC up there?
They did buy it.
They did buy it? Okay.
Yeah.
I knew there was rumors that like Alice was talking about buying the city of Bella Vista, but I don't know if...
They're now in charge of the architectural committee.
Praise God. Gosh.
You might get some nicer homes.
Yeah, nicer
Designs.
homes.
For sure.
That's huge. That's really huge.
Yeah.
Besides the point, though.
But there are already nice homes.
Yeah, there are.
It's crazy. I remember people talking about like land banking in Bella Vista just, when I first moved here 10 or 11 years ago. And I'm sure they have done very well, like buying these parcels, and people are still doing it, buying parcels and waiting for it to appreciate. So I think Bella Vista is a great spot to be investing.
Yeah. I mean, would you agree with Bella Vista being a spot to keep your eye on if you're an investor?
I definitely think so. When I first moved here, which was about 10 years ago as well, you could buy a lot for about $500 to $1,000. That was a buildable lot.
Wow.
Yeah.
And now we're seeing $50,000, for a good build lot.
What's the average home price look like or median price in Bella Vista compared to Bentonville, Fayetteville?
That's a great question. I believe offhand.
Yeah, they'd be ballpark.
It's about $335. And then in Fayetteville, it's about $350 to $370 in that range. And then Bentonville, you're closer to $400.
Wow. If you're an investor looking in on this market, and I'm not 100% sure if you have this data in front of you, but do you know the year-over-year yield on appreciation that from some of these markets here? Like, do we have that data?
So as a whole, on average, it's about 5 to 7%.
Okay.
There's some areas that are a little less, and then there's some that are a little bit more.
Yeah.
I would say probably Bentonville and Bella Vista, you would see a little bit higher.
Yeah. That's what I'd be saying too. So like if I'm looking in this market, I look at real estate, and personally I look at real estate as like a physical form of an index fund, of like a stock market. And like, okay, I got to take $60,000, get a 7 to whatever % return on the stock market, or I can see this physical asset on hand and get a 5 to 7% return, what we're seeing in this area. And it's really interesting to talk about this area on a micro scale as opposed to the macro scale of the country, when a lot of areas are seeing this down.
They're 2 to 3%, I think, is about the average.
Yeah.
With some of the areas, I want to say it was something I read about 150 metros that they looked at, about 75 had a decrease.
Wow. So like while the rest of the country is seeing a lot of decrease in a lot of these metros, Northwest Arkansas, is staying healthy and even increasing on our price per square foot. What would, we all kind of know this answer, but like, what would you attribute that to? For someone listening in, why would you attribute that we're still in a healthy market despite?
Job growth is one of the biggest factors in that. And then the influx of people coming into the area. There's about 32 people a day moving here.
Yeah. So
that's a huge increase, on it's about, I think, 1,000 people a day or a month, excuse me.
Wow. Yeah.
What do you see that people moving to Benton County versus Washington County? Do you have any data on?
So as far as sales go, 65% of all sales occur in Benton County versus Washington County.
Wow.
So I would say a majority of the population's moving to Benton County.
That's 65% at least. And what about, are you guys tracking household income, median household income?
So I do look at that on the Census Bureau, but it lags every 4 years.
Yeah.
Yeah.
And so we should be coming up soon, but.
Yeah. Why do we think that, this is a general question for the group, why do we think that it's pushing to Benton County?
Well, I think
Walmart.
Yes. Well, they also require all of their vendors, I believe it's to be within a 20-mile radius. And so
Benton County.
There's a lot more developable land in Benton County as well compared to Washington County. I mean, unless you want to be, Prairie Grove's a little bit further out there and stuff like that. And Farmington, like we talked about in the last episode, is growing quite a bit. And there's been a huge uptick in sales. But outside of that, the majority of Benton County is newer for the most part. My dad also always used to talk about how Northwest Arkansas used to be just basically Springdale, Fayetteville. I think that's also playing a huge role.
I would say probably too on the commercial side, there's a lot more being built commercially in Benton County versus Washington County.
Yeah, absolutely.
That's partly why I said it on the last episode. I think there's a lot of opportunity in Springdale, Fayetteville too, but there's not as much being built there in Fayetteville and Springdale.
And Fayetteville's a little bit harder to build in.
That was my next point was like, I've been talking with a lot of my clients who have built in Fayetteville, and there's like, it is hard to build in Fayetteville, and it's been very hard to build in Bella Vista as well. And I'd be interested to see if that gets eased up a little bit with the Waltons buying the ACC, and I would think so. And I think they were like, I think the Waltons were trying to build something, and the ACC was like, oh no, that's not an earth tone. And they were like, you know what, we're going to buy you. I think that was kind of in short how it went. But Fayetteville is predominantly very hard to build in, and they have a lot of. I think they go to a lot of building conventions across the country and bring all these ideas and like, oh, let's just implement them back in Fayetteville. And we're like, it makes it really tough. And so, I mean, I know like business owners on the commercial side too. Like, I know my dad and along with a lot of other business owners have been like, all these regulations in Fayetteville, like I'm just going to go to Lowell or Benton County.
The cost doesn't make sense.
It doesn't make sense. It's making my life way too hard. I can get the same amount of growth and better in Benton County. And Fayetteville, you're just, almost keeping Fayetteville funky to a fault in certain parts. When we're sacrificing roads for sidewalks where 2 bikers bike a day. There's a lot. I mean, that could be a totally separate podcast about the
Well, just to go off a little more. Affordable housing is something that they preach, but they don't allow you to build.
Yeah.
So how do you achieve that?
Who do we talk about taking the red tape off with? Not too long ago. But to that point, they're saying, affordable housing. And they're like, but here's 6 more layers of red tape you have to jump through. And it's like, why would I do affordable? What are the incentives there? Yeah.
Bentonville used to be kind of like known to be harder to develop, but I think Fayetteville has gotten the reputation for being harder, and Bentonville's seeing more opportunity and more people in and out, expanding to these other submarkets outside of Bentonville.
I will tell you, I'm building my home right now in Benton County, and it's very nice. Like once you get just down to the county, the Benton County building, like the inspectors are really easy. You call up there and it's like one old lady. She's like, "Hey, Mr. Stanley," and you like go and see him in person. Like it feels like old time. They come by. The inspector has your number. It's like very easy. You're not just a number. They're like, "Oh, you and Miss is gonna have kids here." Blah blah blah.
Where's that at?
Just out past Prairie Creek, like right before you hit the bridge that goes over the. I'm telling everybody on that's listening where I live, but right before you hit the bridge that hits over the lake there, up there,
Prairie Creek.
Yeah, Prairie Creek area. So that's just in the county. So and if you're building in the county, it's super easy, super easy. So we've kind of said all this stuff. If we're looking into this market, and I'm an investor from California, would you say you would look at probably Benton County is what you would, if you had to? I mean, I've sold a lot of stuff in Fayetteville this year for investors, but as a whole, would you say Benton County?
Overall, I would say Benton County, unless you're into student housing, which is a great opportunity too.
Yeah.
So I don't want to leave out the Fayetteville student housing opportunities.
100%.
Yeah, student housing in Fayetteville is on fire right now. I mean, the Marshall just sold for over $407,000 a unit. So crazy.
Yeah.
Gosh, crazy pricing. And they're trying to develop. I know some developments are getting shut down, some are getting approved, but yeah, I mean, University of Arkansas is a huge growth factor to Fayetteville and continues to be growing like crazy. So
I mean, there's a lot of positives for investing in Fayetteville and Washington County, as I think most of my investors are investing in Fayetteville, or when they invest in Fayetteville, it's because of the university.
Yep.
And you may notice that, like, the 8th or 18th quickest growing university in the nation? 8th?
it was, yeah.
And like the 8th. And so it's like we have a very quick growing university with, now you can speak to this as well, the timing of buying those homes for student housing. You don't want to be eating months and I do have people buying right now because that's just when the deals are, but speak to the timing of when you buy, when's the time to buy these properties in Fayetteville?
So I always say in the summer before, or if they're pre-leased, that's even better.
Yeah.
Because a lot of times they pre-lease in April, May, June.
Yeah.
And then, so as long as you're in before August.
Yes.
Because the mid-August is usually when the university starts. And then another opportunity I feel like is in December when they have the turnover, and there's some students who, they graduated or they dropped out or that sort of thing.
Yeah.
So maybe somebody else transferred in and they need a housing opportunity.
Yeah. That's a good time.
So, I mean, going back to what we talked about on Benton County and the growth happening there, I don't know if you have these stats as well, but where are you seeing the most rate growth in kind of,
So I did months of inventory. But as far as rent growth goes, I think that in the city of Bentonville is kind of the biggest portion. And really anywhere that's in a 20 to 30 minute commute of the Walmart campus.
Yeah. Yeah.
Once you get outside that, it's a hit or miss where the rent growth is.
Mm-hmm. What are you guys seeing in Rogers right now? For Pinnacle area, Pinnacle, Rogers, and downtown. I guess it's hard to separate the data between,
It's kind of two different, because they can almost be two different cities.
Yeah.
So Pinnacle area, I feel like there's not a ton of rentals, and if they are, they're the higher end rental market,
Luxury type stuff.
And I feel like there is a need for that.
There definitely is. I don't see hardly any $5,000, $6,000, $7,000 and price per month. And I think if you had something worth paying that, there'd be executives all day that would pay that, because we're talking, if you're paying a mortgage on $1 million, that's $5,000 or $6,000 a month. So, they can be like, I would pay that, or I could just move it. I don't even know if we maybe have one or two of those in this whole market. So there's definitely a market for something like that for sure.
And when you go to the other side of Rogers, I feel like that market is stable. It's not, increasing significantly, but it's not decreasing either.
Yeah.
Yeah, I think the Skyline report had that Rogers built or brought online the most units out of every city over the last half year or something like that.
Wow.
We'll have to pull back up the Skyline report to look at that, but they all got absorbed pretty quickly. And so I think the latest Skyline report said that most of that got absorbed, and now we're still at, the vacancy rates have dropped pretty significantly back down to similar.
Even with all that growth, the vacancy rates still kind of stabilized.
Yeah, they just continue to be absorbed. I don't know if you've seen the same thing.
Yeah,
Dana.
I feel like that's why it feels stable.
Yeah.
it's still a good place to invest in as well. I think that long term, that area, because of the commute times, is a great investment opportunity too for both.
Yep.
Yeah, I live in the Pinnacle area, but I have rentals closer to downtown Rogers, and they're, like you said, they do fine. They're growing steadily over there.
It's kind of an interesting area. The closer you get to downtown Rogers, it's very. So I think stable is a good word. There's not anything crazy happening. But there's nothing negative happening.
Yeah.
There's nothing like super positive. There's nothing negative. It's kind of like just steady Eddie. We've seen really normal returns there. I will say it's harder for me to find deals for investors there. Just because, I mean, if I can find a good house, it's 350 to 380, and then you do a 20% down and the normal interest rate on that, and you're looking at over $2,000 on your mortgage, and then maybe you can get a little over $2,000 on rent. So like we're looking at a break even to if we're talking single family.
Yeah.
Have you seen it being harder to find deals in Rogers for your clients?
I do think it is a little bit hard.
Yeah.
Because I feel like the whole Rogers area is getting this supreme name.
Yeah.
And so it's getting a little bit more difficult. But I do find if you can find a house that's built between maybe the 70s and early 2000s that might need a little bit of remodeling, you can still find a deal.
Yeah.
Yeah. And again, just going back to infrastructure and things like that, the reason that people are moving here, job growth. I mean, we built our whole beginning investing strategy on being around the new Walmart campus. And we've continued to see that we can pull premium rents, and every time we put them up for lease, they go within a week. So I think that's just something interesting to continue to watch. Is just, obviously location is always going to be number one, but being close to some of those hub spots, whether it be Walmart campus or, maybe it's Pinnacle and some of the suppliers there or whatever. But
NWA is evolving so much. I mean, we had Stephanie Orman on, and she and her and Tyler Overstreet are talking about, but you have the Bentonville Square, but now you have the home office is its own like kind of submarket, and they want to have more city centers too. They don't want just those two. They want more. So they're already talking about, Rogers is already doing it with downtown and Pinnacle.
Yeah.
Springdale has downtown, but you also have the medical mile corridor that's developing a lot. And then Fayetteville, we'll see what happens. But it's interesting to see that development.
Yep.
Yeah. I would say if I'm an outside, and you can confirm or deny this, if I'm an outside investor looking in, I'm probably looking at how can I get something that at least breaks even close to the Walmart, something by the one. And I hate the word break even as an investment, but I'm seeing if I can get something that works as close to Walmart headquarters as possible, because I think yes, we've seen a huge jump in appreciation, but I don't think it's the end of it by any means. I'm probably looking at Bella Vista. I do like Pea Ridge. It's harder to get my out-of-state investors' minds wrapped around Pea Ridge and Prairie Grove. Like when I say that, they're like, there's nothing online about these places. I'm like, you got to trust me, bro. Like it's a great spot. I mean, would you say the same for someone looking at a place to invest? Or like, is that where you're pointing people?
So I think right now, with interest rates where they are, you might be at a break even towards the campus, but it's a long-term game. It's not the short term. I think you're going to see more growth financially in those areas. Versus, outskirts, and then say interest rates drop, your amount of income the following year, once you refinance, is going to be significantly higher.
Yeah.
So 100%. It's just a long-term game.
You mentioned it earlier. It depends on what your goals are too.
Yeah.
Like if you need a great point right now, maybe not. But if you're, banking on appreciation, if you don't necessarily need the cash flow, then you could be okay if you have a long-term vision. If you're trying to get in and out, it's probably not a good idea to bet on that. Yeah. Maybe you do the fixer up. Maybe you find the 1970s to 2000s that a first time home buyer is not going to do, or, an institutional investor is going to look the other way.
Yeah.
Finding those things that you can force appreciation is going to be your better bet.
I mean, if you're looking at like some of the DSCR loans, it's not going to make sense close to campus.
Yeah. I found that I've been having to get eerily very, very transparent with people coming into this market and going, hey, you're probably going to be break even. And asking them and assessing what their goals are, because and I'll tell this to anybody I feel like from talking with you just a little bit, you would say the same, is that if you're looking for cash flow and you're looking to replace income, you probably need to look at Little Rock or Fort Smith or a market like that.
Yeah.
If you're looking for this to just set it, maybe forget it, you're going to get good renters here and pop back in 10 years and it appreciate a lot. I think this is your market. And I think a lot of people think about getting into real estate and it's a hot, fun idea, but how do we look 10, 15 years down the road and assess that? I mean, I think markets like we've talked about, like Benton County and around the university and things like that. I mean, even I'm pretty hot on Prairie Grove. I think it's a further out, like 10 to 15 year thing.
Yeah.
Like it didn't even make top 15 list. But like for my clients, we're able to get $330,000 home, 4-bed, 2-bath, 3-car garage, 2,200 square feet for $330,000.
Yeah.
And I'm like, okay, in 10 years, that's going to be like 550. Like it's just kind of, if we just look at markets like Dallas and Austin, and like when they were this size, and it's got to go somewhere.
Yeah.
I would say, are you feeling like you're having to get very transparent with your people too?
Typically, any of my investors, I'm always pretty upfront and transparent.
Yeah.
And try to, if they're
not that we weren't being transparent before.
no, but
now I'm being transparent.
Blunt is probably the word you're looking for.
Blunt, yes.
Versus transparent.
That's correct.
Yeah. I mean, I always ask people, do you have a 5-year goal, 10-year goal? Because here's what it could look like. Obviously, I can't predict, but these are what I see based on what the market has done. And, so if your goal is 5 years, it's probably not going to be in the downtown areas. You need to go a little further out, but not too far out.
Yes. Yeah.
So if you go too far out, then you're at the 10-year.
You're at the 10-year mark.
Yeah.
That's just invaluable local knowledge that like you can't get from being an outsider looking in. Like be far out, but not too far out, and be in this little hot pocket. What about Highfill? Like what kind of market? And we can talk for another episode on Highfill and Decatur and like do it and grab it in Gentry. Like what are those little, what is it? I always get Grab It and Gentry mixed up. Which one has a cute downtown?
Gentry.
Gentry, I think. Yeah.
Wooden Spoon.
Wooden Spoon. I think that's super cute. And I think there's potential down there for something really cool in the future too. There's a bunch of sub markets around this main corridor that I think could blow up that, and that might not even made the top 15 list that like are doing really good. What would you, on the top 15 list, is there some small cities on there that we can assess real quick?
Yeah.
I'd like to maybe go over some of those for an outsider looking in, some of these small cities that you're not hearing about. And it may not be positive data anyways, but.
I think Siloam is one of them. They have the university down there, John Brown University.
John Brown. Yep.
So that brings in some student housing as well as, some rentals down there.
Yeah.
I know at one point the rentals per square foot out there were actually higher than Fayetteville and Rogers.
Wow.
That was about a year ago when I looked at that and was shocked by that.
Yes. Does that same data point ring true for Prairie Grove versus Farmington still?
I'd have to get back to you.
I know at a certain point in the past, it's been like Prairie Grove has gotten higher rents price per square foot than Farmington, which was really weird.
Yeah.
And that just brought it to my mind real quick. But Siloam has a cute downtown too. And I think
the house is in Prairie Grove. This is just from me showing. Out there a little more desirable. Aesthetically than.
Yeah. And Siloam also has Simmons Foods, so big corporate out there. And then they've got, the vacancy rates in Siloam. I don't know if y'all have looked at them recently, but they're well under 2% as well.
Yeah.
So not a lot of rental units out there, and they get absorbed. So interesting to look at.
Have we on the because from representing a lot of investors, I'm seeing it's taking longer to get some stuff filled, even though the vacancy rates are showing still holding to a little under. I'm feeling the market is feeling like it's taking a little longer to get renters. Is that? So
whenever I pulled that, it's about over the entire year, it's about 6 months.
Okay. Yeah.
So your 2 months though that are going to be the slowest are usually January, February, somewhat into March.
Yep. Somewhere around there.
Yeah, I think the other interesting piece of that too, if you look at average rent price in Northwest Arkansas is probably, I think around like 1,030, maybe something like that. Last Skyline report. You know, if you're double that, obviously I think there's just going to be it's going to be very different, right? I mean, vacancy rates, if we're at an average of 1,030 or whatever, and you're above 2,000, there's a difference.
Calculate some more vacancy in there.
Yeah, there's a difference.
That's a great point. That's a really good point. So if you're you're trying to market everything 2,000 to 2,400, I mean, you might need to bake in like 6 to 8% vacancy, something like that. Yeah.
Typically, what I see is about $1.10 a square foot. In some other areas, though, like closer to the lake, you're seeing about 0.9 per square foot.
Yeah, that's an interesting market out there towards. That's another sub-market out there. Is
have you seen? Is there any like numbers you can share on by the lake that you've seen like growth compared to the rest of the area?
So I would say as you get further north on the lake, and being specifically on the lake, you're going to see an increase in value. And that's because the lake is supposed to be cleaner up there. Yeah. And I also think you get a lot more vacation homes up there. Yeah. Secondary homes.
It's an interesting, the Prairie Creek is an interesting feel. You know, we're basically in Pinnacle right now, Pinnacle area. And you have like 3 parts of Rogers. You have Pinnacle, you have downtown Rogers, and you have like Prairie Creek, and then like Lake People. It almost feels like you go from like bougie to like, I use the word gritty in downtown Rogers, like, and then you have like, it's almost like you drive and hit Prairie Creek and like stress starts melting off and you feel like you're on a vacation. So Rogers is very diverse in its feel of things, and you can get a lot, and it's really wide. I mean, it spans kind of like Bella Vista is a lot bigger than we think. It's a lot wider of a geographical area. I think Rogers is very wide geographically, and there'll be homes pop up and I'm like, I thought this was in Eureka, and it's actually like technically Rogers still. So I think it'd be hard, to your point, almost like really hard to pull up like lake area exact stats because Rogers is so big.
I think that you also, in that area, you're seeing a lot more short-term rentals, Airbnbs. And so calculating those on the MLS is near impossible. You have to go on to AirDNA, that sort of thing, which I've done in the past.
Yeah. Is AirDNA your go-to for finding comps for short-term rental stuff?
Typically it is.
Yeah. And we haven't seen any restrictions as a whole for Rogers on short-term rentals, but there are lake communities and covenants that have restrictions against it. So we're having to call now on short-term rentals. And there is, I mean, we can talk a little bit here at the end of this, like there is with the big, beautiful bill, I'm working with a lot of investors right now on buying short-term rentals for the end of 2025. Yep. I am not a CPA, but you can basically buy a short-term rental. And some of my California clients were explaining to me, they're like, essentially we can write off like 30% of the house's value and for my 2025 taxes. So I have a few that are looking at like $1 million homes, and okay, we can write 300,000 off for 2025 with this bonus depreciation coming back a little bit. So if you're listening in, that is a potential strategy to talk to one of us on. I'm working with a lot of people that basically I'm underwriting deals as short-term rental, but I'm also making sure they work for long-term. So you call them a short-term rental for 2025 and then turn them to a long-term in 2026. So that is a tax strategy, which we could go into another episode on tax strategy. As we're wrapping up here, like, are there any specific data points that we might have missed that you wish we would have gone over, or points that maybe an outsider looking in might really benefit from, just so we don't miss and go over anything?
I think we talked about price per square foot. Rent growth we didn't do a lot on, but I think that kind of mirrors the some of those price per square foot. You know, I think you could look at rental price per square foot, you know, where in Bentonville where you're over $3, you know, pushing $4 a square foot, you know, where, you know, parts of Springdale, it's, you know, under $2 a square foot. You know, Fort Smith, it's like closer to $1 a square foot. So I think that as an investor, you should be evaluating price per square foot rental, but also taking into account chunk rents. And just like we're talking about the new home price per square foot, people are building smaller too, you know, just because the average home price is changing. From what I'm seeing, people are in multifamily, the unit sizes are being built smaller too. So I think that's being seen the same in new builds too.
Yeah, 100%.
Yeah.
Did you have something there? It's okay if you didn't.
No. I was just going to say, for using the data, it's not just about, when to buy, it's also about when to sell. And so just taking all the factors in and seeing what your risk is and what your long-term goals is the biggest key factor, and what decision we can help you make.
Yeah. I was just talking with somebody about, if you have $200,000 of equity in something, what could it be doing more for you if it was deployed into the market versus just, it does feel good to have that, but it's not doing anything for you at that point.
Yep. Desiree, how can people reach out, find you, or find your social media pages? Time for you to plug kind of any of that.
So we have nwalook.com. We also have Instagram, which is nwalook. And then we also have Facebook at nwalook.
Very easy to find.
Yeah.
Awesome. And then you have a newsletter as well, right?
I do. So you can go on and subscribe on the website. We offer one free monthly newsletter. It's basically a recap of Washington and Benton County monthly. And then the other 3 are kind of deep dives into maybe a specific city like Fayetteville, Bentonville, Pea Ridge, and going into the data further in those specific areas.
Yeah.
Awesome.
Great. Well, appreciate your time today. And it's been great the past couple episodes. I think there's a lot of value for listeners here. So thanks again.
Thank you so much, Desiree. Thank you so much.
Appreciate you.
Of course.
Thank you.
See you guys.
Again, thank you guys for tuning in. I'm going to go ahead and list some sponsors off here. We're going to start with Whinstone Private Lending. This episode is brought to you by Whinstone Private Lending, one of the top private and hard money lenders now serving Northwest Arkansas. Whether you need short-term capital for a flip, a bridge loan, or creative financing, they've got you covered with very flexible products to fit nearly any deal, including 100% financing. What sets them apart is their deep expertise, fast response times, and ability to think outside of the box to help investors like us close quickly and efficiently. If you're looking for a real lending partner, check out Whinstone Private Lending. Link is in the show notes. Our next sponsor is Advantage Title and Escrow. They're a local company. They do great work. Specifically, Kayla Phillips. I can speak personally on this sponsor because I use Kayla for all of my transactions. It's been 2, 3, 4 years now, and Kayla and I have done a ton of deals. We probably do between 65 to 80 deals a year together, and they do a great job. The SOPs, so systems and processing that they have over Advantage Title, is just incredible. Clients love it. They do a great job from start to end communicating. When I give a deal to Advantage Title and Escrow, I know that it's going to be taken care of. There's no second guessing. I almost am able to treat them like a second transaction coordinator to my transaction coordinator that I already have. I know that they're going to handle the systems and processes correctly as an agent, as a homeowner, as a buyer or seller. They do an incredible job of handling a transaction and communicating throughout the process. They do a great job with communication, especially Kayla Phillips over there. I would highly encourage you, if you're looking to close on a home, buy a home, if you're an agent listening, to use Advantage Title and Escrow, specifically Kayla Phillips. So you're going to reach Kayla best at 501-358-1601, or you can email her, Kayla, Cayla, at goadvantagetitle.com. Advantage is ADVANTAGE title.com. This episode is brought to you by Armstrong Bank. At Armstrong Bank, your business isn't just business to us, it's personal. Our bankers are invested in your success, and we're ready to build a relationship that lasts. You deserve a strong financial partner by your side. Together, we can help make your business even stronger. We've designed products and services with your convenience in mind. To learn more, visit a location near you or visit armstrong.bank. Armstrong Bank, strength runs in our family. Member FDIC, equal housing lender. If you enjoyed the show, make sure to give us a follow on your favorite podcast platform so you never miss an update.
Don't forget to connect with us on Instagram, Facebook, and LinkedIn for more real estate insights and behind-the-scenes content.
Have a question you want us to cover? Send it our way. And if you're interested in sponsoring the show, visit nwainvesting.com to get in touch. Thanks for listening, and we'll see you next time.